Anyway, now let's go. Now today is quite straightforward day, right? Because as long as we're under the MAs, right? So this was quite straightforward. As long as you're under the MAs, don't go long. That's what I told you right in the morning. So therefore, we were already waiting for that very beautiful. This was very beautiful. We were already waiting for that. This was 9:38, right? You understand? 9:38 was here. This was even before we got there. So 9:38 a.m. Right? We were already seeing the green buying and the orange liquidity. As I told you, there was already orange liquidity there. Wait for the MA's retest and you see that beautiful liquidity, and the rest is history, right? We had almost 20 points down, and this was quite beautiful because we identified the teal, and I told you if teal and green are selling, try to keep it. At least some protected run is on the way down as well, right? There's no need to call a reversal if teal and green are selling. One very important thing which I will teach you, Discord members, this weekend on the training video is identifying this lack of bullish control. Right, so understanding the lack of bullish control here is one big reason why there are some certainties to short this. You have to understand this. Trading, you do not know this is going down 20 points. You don't. There's no chance you would. Someone tells you he knows or she knows, they are just lying to you, right? But you know there will be some selling. And when that happens, what you do is you get into position and you protect your position, right? You see if it grabs the liquidity, and then you nurture the runners algorithm by algorithm, level by level, until you get to where the 20 point is. So that's the thing, right? So step one is you know that there will be some sellers here. Right. Step two, you notice there's no bullish control. Step three, you know that there's some liquidity for the bears here, as the head and shoulder pattern suggests. Step four, you know who's selling. So in this case, the green is selling. You know the teal is selling. So you get into position, a short position. You protected it within the first few candles. You're safe. You see the seller is involved, right? You protect more. You see opportunities. You can reload this because you notice there's always a bounce, and the bounce is always creating new head and shoulder patterns with the magenta and the orange, especially the orange. And you reload if you need to here. And then once again, you see the same old pattern with that magenta and orange. And you reload that again. And you have targets along the way, which I will show you that. And that's how you nurture entire move. So if you think trading is just taking a short here because you know, and then keeping it all the way down because you know, and enjoying the 20-point trade by doing nothing in between, then you are sorely mistaken. It's better you stick to gambling, right? So this is a skill. You have to understand that it involves truly some form of management of risks and management of rewards. And that's the beauty of it, isn't it? So understanding this is very important, right? Instead of treating this like a signal. Now, this is absolutely beautiful. You understand that. And we had several targets as well. So one of the targets was this daily gap close, or 1016. 1016 was right here, right? 1016, we already know that there is a gap close here. So you're just waiting for that gap close, right? And subsequently we had, let's see, the bottom Bollinger. So this was 1049. So at 1049, right? So 1049 was right here once we had broken down here. So 1049. We were already waiting for the other target here. So this was the bottom Bollinger, right? And then one more. So you see we already had understanding of the two targets in place, and then one more target here, and this was at 11:59. You see it here, right? So 11:59, which was about here, 11:59, right? We knew that there was another target of the gap close near to the 725 level, right? So three very clear targets, and the market was very kind today to grab all three targets. Now, there's one thing that you have to know, and that is, I told you about the teal selling, right? So let's see the teal selling. Now, once you understand the teal selling, and we got this as early as 11 a.m., right? So if you knew this from 11 a.m., this was, what time? 10:53, yeah? If you knew this from 10:53, you would not have shorted this, knowing that the teal was in control throughout. Why do you understand this? It was just selling in the green, right? You saw the green that's just selling very aggressively, right? And once you understand the teal, you do not attempt to go long. if you want to, right? So if you caught this long here, this is great. This is a good zombie, right? There's understanding that the magenta and the orange have to rebuild liquidity here. So yes, you could use orange to guide your trade, and you would see the green that was also involved here. But more importantly, I want to show you that if you wanted to go long, right, take a look. It was always just bouncing off the teal. Just take a look. This was just absolutely beautiful. The teal was just building liquidity. So a beautiful final 10 minutes, final 30 minutes trade anyway from here. If you understand the concept of that selling, that has lost control and has allowed some form of bounce here. But just be careful, because we're still in the middle of today's range, right? This is today's range, and we are right smack in the middle, and that's what I want to talk to you about next. Let's take a look at the daily chart. Now, there are a few things here. If you've been watching my videos, thank you very much for doing that. I often mentioned that previously we had one entire market cycle that happened literally in a couple of months, and you have to check back the videos that I talked about on a daily basis to understand the thought process of experiencing one market cycle in 2 months. That's something that used to happen in a year or two, right? It has all happened and condensed in 2 months. So it's a fantastic learning opportunity for you if you can run through the videos then between February and April, May. I think it's between March to May. It's better. Yeah, you will have a better understanding from the daily videos of thought process of dealing with one market cycle. And now you see it happening again, right? We had one more cycle here. So let me explain what happened. Back then, before I was banned, you would notice that we were just trending up. And this is something I told you, right? We were trending up the upper Bollinger and the 5-day moving average here. I mentioned we will tap the 20-day moving average eventually, and you see that happening right after we tap once again the upper Bollinger here, and eventually we got to the 20-day moving average. Now, some of you use this information in a very unhealthy way. What you do is that you average down on the way here, and eventually you get there, right? That's very dangerous. Please don't do that, even though you realize that we will get there, right? Because firstly, I don't know how much liquidity you have. I don't know your solvency. And some of you just very dangerously just average down, right? So it's dangerous. I don't know how you do it, but don't do it if you can. The better way to do this is to just keep selling calls and rolling them up, and that's fine. And once you reach a certain point, right, you will use the profits that you have from selling these calls to buy puts instead. Now, that's the better way, right? So anyway, we retest up a Bollinger, and you see the 5 days starting to trend down, right? And it's a large trend down that was from last Friday. So this last Friday provided the liquidity for the 5-day to trend down, and now you see we are starting to cross below the 20-day moving average. In fact, today we crossed over that right in the morning. That was the warning I gave you in the morning as well, and then we already retested the bottom Bollinger. Now we're back near to where the liquidity is. So if this wants to continue heading down, this does not surprise you if the 5-day crosses below 20-day and it continues to build liquidity trending down together with the bottom Bollinger. Now that's the only way this continues to go down. And where does it want to go? Naturally to the 200-day moving average, and I'm hoping the 200-day moving average takes its time to the 700 level, and that's where most of the liquidity is, because if the bulls and bears are interested in that range, this should be it. But once again, level by level, algorithm by algorithm, you want the bottom Bollinger and the 5-day to continue trending down like that, with the 20-day catching up eventually as well. Some big news next week, and that's FOMC. This will be the first FOMC meeting with the new Fed chairman. So just keep in mind, the market will be paying close attention. Now, there were news of a rate hike when we were at 700, but the market still continued trending up nonetheless. So you just have to be a little bit more careful, because if the market does if the Fed does provide more guidance of more increased rate hike, we will certainly reject the 700 level here. So just pay close attention. The market might just be de-risking for that possibility. So just pay close attention to the 700 level. Hopefully by then we had a 200-day moving average already coinciding with this liquidity range here. I think we already did between the 680 and the 700 level here. So this is very crucial if the market wants to head down here. Right, allow the bottom Bollinger to start trending down if this wants to head down. We have plenty of time, so don't worry about that. Take your time, right? Don't worry about the market. Let the market reveal itself to you, as I mentioned, right? So if this wants to continue heading down. But otherwise, nothing's changed, right? If you notice, we are still, well, generally still in an uptrend. Even the bottom Bollinger, right, is at a range higher than the high that we experienced in May. So what's the problem with that? Market's still pretty elevated, so you just have to be more mindful of that. If we do continue bounce up, you will notice there is some liquidity here. I want to bring that to your attention right there. So allow the 5-day to cross with the 20-day again into this territory if this wants to head up, right? So it's quite straightforward. You know, nothing's changed about that. You will notice as well that the 200, the 20-day moving average closes the cup, right? And you will see some structure here before it starts reclaiming. By then your 5-day will also come coincide together with this green algorithm right here. So you know the liquidity ranges, especially in the 30-minute chart. You know the the selling continuation structure. You see who's selling right here, right? Any major selling, it's the green algorithm. So when you see the green getting involved, right, try to keep protected runners if you can for the day. But otherwise, generally, it's still the orange that's selling. So you want to see, if you still see orange, if you still see green that's selling here in this range, just be a little bit more careful, especially when we are under the 20-day move. This is the 20-day moving average, as well as the 5-day moving average right here. Now 5-day will start trending down, so you have to pay close attention. That will be where the liquidity is. If the market continually rejects the 5-day moving average, you will know why. And as I have mentioned here, just wait for bottom Bollinger to start trending down as well. You will not miss out from that, right? So it's quite clear from there, understanding the macro structure here. The liquidity zone here now will be where the blue algorithm and the green algorithm will be. So this range is where I would expect the 20 and the 5 to start, converging to the center of the range right here. So just be more mindful here now. Watch out for selling continuation structures, and most importantly, understanding the macro charts here, right? We have already retested the upper and bottom Bollinger. So now wait for the liquidity to be building within the 5 and the 20-day moving average. Now you will not miss out from here. Just take a look, understand the market cycles, as I've always been telling you, right? You missed nothing, right? So don't be too caught up with smaller moves that you forget the larger macro structure, right? Especially if you're just adding to your portfolio. If you can, I would suggest you wait for 700 if we get there. If we don't get there, that's fine as well. You want to see if there's any larger structure, right? So once again, don't be too caught up with the small moves, right? Because so many people just caught up with this grind. And you notice just in a couple of days, we have completely taken back that gains from this very small grind. So as I always tell you, if there is no structure, there's no sustained move. So that's fine. Don't be too concerned with that. But yet, at the meantime, this grind is fantastic, because if you have been selling calls, as I have taught you, right, you would have at least some money now. You can prepare for hedging your portfolio, and that's absolutely beautiful as well. Right, so anyway, thank you for watching this. It's a little long, but I appreciate you. I may not post for the rest of the week, as I have told you. Let me just organize and set things up. But check out the resources, links in the description. I will be certainly posting every day on the Discord server, so don't worry. So thank you, Discord members. I will see you closer to opening.